Hello! In today's video, we're going to show you a new feature that enhances the functionality of purchase orders, specifically the automatic calculation of input VAT. Within the tax category, we've added a new column related to input VAT, where we can determine whether the calculated VAT is deductible, non-deductible, or if it involves a reverse charge. We'll explain the reverse charge VAT in a separate video. Today, we'll focus on setting up non-deductible VAT. In this example, we've defined a tax category called petrol. This petrol is used for vehicles, and in our business, we do not have the right to deduct this VAT. What we'll do within our product and services list is to include an item called unleaded petrol, where we'll assign it to the tax category petrol. This means that item belongs to the petrol tax category, which doesn't allow VAT deduction. We'll also include another item called energy for electric car, where the tax category is electric car charging, which is deductible. What's now enabled, as of this version, is that we can combine items within the same invoice that either have or don't have the right to VAT deduction. In this specific case, we'll set a quantity for unleaded petrol to 40, with a purchase price of 20. And for electric charge, we'll input 75 kilowatts. We can see that input VAT is calculated automatically since we set it to auto-calculate, and we notice the deductible VAT is 0 since there's no right of deduction for this item. Our supplier has calculated the VAT, but we don't have the right to deduct this VAT. There are specific calculations for VAT, and the deductible VAT here is reduced by this amount because we don't have the right to deduct these $16 of VAT. What's interesting is that we have the ability to determine where the non-deductible amount is recorded. We can decide how to account for this non-deductible amount as inventory, cost of services, as a landed cost to increase the stock amount or cost of services, or set it into a separate tax account as a tax expense. This depends on your accounting policy and how you document it. If we want to manually calculate VAT, we can choose manual and add VAT amounts manually, similar to how we've done before. For instance, setting VAT to 20 and non-deductible VAT to 0, or if, say, we have $15 to account for. This manual approach is recommended only when the calculated VAT from our supplier doesn't match due to rounding or special tax items. We'll switch back to automatic. Remember, if working manually, the deductible VAT is empty by default, and you must fill it in manually. We've set it to automatic and defined it. Additionally, with tax location, whether it's mechanical import or domestic trade, in this case, it's set to domestic trade, and this is how our VAT is calculated. Now, when I save the document, we'll see that the landing cost value has increased, indicating it's been allocated to our stock amount, in this case to unleaded petrol. That's the basic setup. If we have other items, like gas, solar home products, for example, we'll set that to a battery pack or gas converter, anything related to procurement with different tax rates. Once we define the purchase price, these values are automatically adjusted. We can see that both input VAT and deductible VAT are automatically set. If there's an exception where it's unknown, we always have the option for manual entry and to adjust the reduced rate. We might not have the right to unlock it, but it recalculates automatically. Again, recalculations are done according to the applicable tax rate logic, so it's important to keep track of this. We emphasize that this new deductible VAT panel we've introduced must be adjusted manually if needed. We'll set it to manual entry, specify no reduced rate, and then see how this affects inventory costs. And that's it.